ladies and gentlemen, software stocks are quietly setting up for massive moves heading into 2026, and most investors have no clue this is happening. Here's something wild. Since November 2021, one software stock returned almost 722%, dwarfing the broader market's performance, and another, PLTR, returned over 346% in roughly the same time frame. Yet most people still panic when software stocks dip. This is one of those moments you'll look back on and think, why didn't I pay attention? We're not talking meme stocks, not pump and dump garbage. We're talking real companies with real enterprise demand, software that's mission critical. And today I'm breaking down my top favorite software stocks to buy before 2026, with real facts, past price behavior, and actual noteworthy news that's flying under the radar. Let's go. Before we hit tickers, let me ask you something. Why do most people blow it in software stocks? They buy based on hype. They panic on drops. They chase stories instead of fundamentals. That's not how real investors win money. Software companies don't move like commodities or cyclical stocks. They grow in stickiness, recurring revenue, network effects, and here's the kicker. Software stocks are meant to be volatile in the short term, but explode in long run when the business model works. Most people never stick around long enough to see the payoff. Before we hit the specific names, let's get one thing straight. Hope is not a strategy. If you own a stock and you're only holding it because maybe it turns around, that's already a problem. Great investors don't cling to hope. They only hold companies where the product is mission critical, customers are locked in, growth is predictable, the long-term thesis still makes sense. If conviction is gone, cut it. That's not losing, that's discipline. Favorite software stocks to buy before 2026. These aren't short-term ideas. These are multi-year compounders. We'll look at an interesting past price reaction, a noteworthy real news event for each. Let's dive. PLTR is one of the most talked about software names tied to AI and defense tech, and its growth has been insane. Palantir stock has seen absolutely wild moves. Back in 2024, it delivered massive returns, climbing hundreds of percent in a year, and landing on the S&P 500 and Nasdaq 100. That kind of price action tells you one thing: investors have eyeballs on this name, and the insiders know it. In 2025, Palantir reported its first ever $1 billion quarter in sales, driven by rapid AI adoption and strong government contracts, and the stock soared above previous records after the announcement. That's what I call fundamental validation meeting market excitement. Now, here's the nuance. Palantir's valuation is crazy high, and analysts are split, some still bullish, some calling it overvalued. But here's the key takeaway. If AI and government spending keep accelerating, this is the kind of company that could hand investors huge returns, if you're willing to look past the noise. Adobe, ADB. Adobe doesn't always grab headlines like the AI darlings, but it powers creativity and enterprise workflows around the world. Adobe's shares once rallied 15% in a single session, the biggest gain since 2020, after it beat earnings and revenue expectations with strong AI-enhanced products. That's huge, especially for a mature software firm. It shows the market still reacts strongly when Adobe proves it's innovating. Adobe has seen some analyst downgrades citing AI competition, but it also expanded AI tools in creative and enterprise platforms, including strategic partnerships and platform enhancements that drive stickier subscriptions. Here's what I love about Adobe. 99% of Fortune 100 companies use Adobe AI tools. That's enterprise penetration most software companies dream of. Market doesn't love it now, perfect. Because that's exactly when good investors start paying attention. Salesforce, CRM. Salesforce is the granddaddy of enterprise software, and while it's not always flashy, it literally runs customer data for hundreds of thousands of companies worldwide. Earlier in 2025, Salesforce's stock fell sharply after a revenue slowdown fear, but then made a strong rebound when the company guided toward more than $60 billion in revenue by 2030. Those swings tell you something important. Investors are volatile, but long-term fundamentals matter.
Is this company has made a massive pivot and investment in a product called Agentforce, and we are finally seeing signs that that is really working.
Salesforce has been expanding its AI capabilities with platforms like Agentforce, and analysts named it a top pick for enterprise software due to this strategic shift. That's the kind of evolution that keeps companies relevant long-term. And remember, Salesforce still has a massive contracted revenue backlog, tens of billions locked in for future delivery. That's not theory, that's real recurring revenue. ServiceNow isn't as famous as Salesforce, but it's an AI automation backbone for enterprises. Think workflow, tickets, processes, and more importantly, AI-driven next-gen automation. Earlier this month, ServiceNow plunged double digits as the biggest decliner in the S&P 500 after news broke about a major acquisition and mixed sentiment around growth. That's a stark reminder. Even good companies can get punished on news. Short-term volatility is real. ServiceNow is reportedly nearing a $7 billion acquisition of cybersecurity firm Armies, a move that would be the biggest in its history and could expand its TAM significantly. So here's the theme. Big deal talk can crush a stock short-term, but game-changing acquisitions set the stage for long-term growth. That's a classic market misinterpretation playbook. Oracle isn't pure software. It's often grouped with database and cloud infrastructure, but it's firmly in enterprise software land and tied to big AI spend. Oracle's stock has been surprisingly muted relative to big news over the last year, even when major partnerships were announced, showing that sentiment isn't always in sync with fundamentals. This creates opportunity. Oracle was in news tied to major cloud deals and strategic AI backbone commitments, but the market still treats it cautiously, likely due to concerns over debt levels and margin uncertainty. That gap between news and price reaction is exactly where smart investors look for ideas. Software stocks aren't sexy every day, but the winners are the companies that quietly build mission-critical infrastructure that every other business needs. If you want volatility, go trade crypto. If you want wealth creation, think enterprise software. Plan your entries, know the risks, hold for multiple years, ignore the noise. 2026 is coming, and some of the biggest winners won't be the obvious ones. Appreciate you for being here, and I'll see you in the next one.